But I think we have the management of BEML with us.
Well, that's right. Let's focus on BEML. The start to the year was actually muted, but what's the way ahead? We're joined by Mr. Shantanu Roy, the chairman and managing director of BEML. Hi, Mr. Roy. Good morning. Good to see you. And as always, well, the start to the year has been a little bit muted. So I wanted to ask you whether you want to revise any of the big three numbers you gave us last time around. You were talking about revenue growth of around 20%. For the start, it's been flattish. You were talking about margins improving by around 150 basis points. And the order book ending at around 22,000 crores for the year. All these three numbers do hold out?
Hi, Nigel. Good morning. Thank you for having me here. All the three numbers, it should remain the same. The 20% growth, the margins, as well as the order book. The order book has done pretty well. In the current financial year, we have already received orders of more than 2,900 crores, out of which 60% has come from rail metro, 20% each from mining and defense. We are at an all-time high as far as order book is concerned, 16,673 crores of orders, out of which rail metro makes up 65% of the order book, 26% is defense, and 9% is mining. So we have held on to the numbers in the first quarter. There have been some pluses, some gains, especially in terms of the margins getting better. Number two is the cost going down. We have held on to our employee remuneration. We have held on. We have reduced the inventory. This year, our major focus is on reducing the working capital, and for that, reduction in inventory, reduction in the debtors.
Mr. Roy, just to come in out there, actually the start to the year has been very, very feeble. There's not been any growth. But just to reiterate, you're saying that the remaining quarters onwards will be good, such that you achieve a 20% growth, right?
Yeah.
And because of the cost focus measures as well as operating leverage that will play out, margins this year will improve by around 150 basis points in comparison to last.
Yeah.
And order book goes to around 22,000 crores. That's right? Any particular reason why the last quarter then was flattish? Are you having some supply issues? Is there, any kind of difficulty you all experienced in the first quarter that it was so soft?
You see, there are four critical pillars in your organization to perform. First is the design, second is the supply chain, third is the capacity or capability in terms of human resource, and the plant and machinery. So here the material, that is the supply chain, has been of major concern to us. The supply chain is taking more time to stabilize than what we expected, especially for rail and metro, especially for the defense. And more so because we are indigenizing, and in the process, in our journey of indigenization, the supply chain has to not only be able to give the numbers, but also they are to come up and give the quality that is desired. So these two areas, the supply chain partners, the industry partners, have to ramp up. And that is where it is taking some more time to stabilize. In spite of that, it's a commendable effort, I should say, that we have held on to the numbers. But the second quarter onwards, and more so from the third quarter, when we expect the supply chain to further stabilize, and with more options coming our way, especially in the rail and metro, especially in the defense, in terms of the industry partners, the number of industry partners who will be onboarded by that time and who will be developed by that time. So things should go well. So this year, majorly, it is an execution challenge.
Okay, so that explains the
Orders will come, but execution is the main challenge.
Okay, and is that what explains even the Q1 softness, the execution?
Absolutely.
Got that. I think last time you spoke about one large Mumbai tender, which you were hoping to close, about 30,000 crore. Is that correct? Which you were hopeful will close soon.
The tender
it was a Mumbai MRVC train contract, about estimated, I think, 30,000 crore. You said expected to be floated soon, but likely execution will start only next year. Has that closed? What's happened on that front?
The MRVC tender is yet to be announced. and yet to be floated. And once it is floated, it will take at least 6 to 8 months for the conclusion to be reached. And the execution will start 2 years, at least 2 years. It's a huge number. It's 2,856 cars to be precise. And it will be executed over at least 5 years. And the execution will start only after 2 years. But in our estimates, we have not considered the MRVC for the current year.
Okay. And exports, what was the contribution, Mr. Roy, of exports in the current quarter, and how will it trend going ahead in FY26?
Current quarter exports has not been very good, but in the second quarter, the exports contribution is going to go up to at least 3 to 4%. We are in the process of executing one big order from the CIS region. We expect some more orders. I'm talking about the mining and construction vertical. We expect some more orders which we'll be executing in the current financial year. We expect some orders for the rolling stock in exports for the first time. The order that we have recently received is only for the retrofitment and upgradation. But the new rolling stock order, we should expect some rolling stock orders in the export market in the current financial year, which will then go for execution in the next financial year.
Okay. What about the Vande Bharat order, sir?
Vande Bharat, already the order is there. We are in the process of executing. Okay. And very shortly, the second, third, fourth rakes will come out. And the balance 6 rakes also in the coming 4 to 5 months, we will be completing that order.
So what is the contribution to the revenue, sir, in this year? Please go ahead.
The contribution of Vande Bharat to the revenue this year should be around 10%. Into 2%.
Got it. All right. So just want to clear out 2 numbers. One is on exports as a percentage of your mix in this 20% growth, that you're talking about. How much will exports stabilize at for the fiscal? And defense as well, you were guiding that, it will contribute more in this year. Yes. So as a percentage of the mix, what will it be?
You see, last year, defense contributed around 27%. This year, we are expecting defense to grow by at least 70 to 80%. That is what we are looking at, and we have the orders also. So contribution of defense should cross 30% this year. That is number one. As far as exports is concerned, the overall export, the physical export that we expect this year to the top line should be around 3 to 4%.
Okay. All right. Well, it's always a pleasure having you on the show, Mr. Roy. We're going to hold you to these numbers, but you're saying there were some supply issues in the first quarter. You're optimistic things recover from here on. And the 3 big numbers you're giving us, 20% growth, 150 basis points improvement in margins, and order book to around 22,000 crores. Thanks a lot for joining in here on CNBC-TV18. The stock as well is perking up a little bit post that positive commentary.